Good day, ladies and gentlemen. We are Team X and we present our buy recommendation on Alrosa Power. Our target price is 140 rubles with the upside of 55%. Alrosa's history dates back to 1957 when the trust Yakutilmas was founded. Nowadays, Alrosa is one of the biggest diamond producers in the world. Alrosa's business model is sound. It is based on focusing on the most marginal segment of diamond production. Alrosa is engaged in geological exploration and production of diamonds. As you can see in the slide, Alrosa is engaged in the 4 stages of the diamond production value chain.
Although the diamond industry is shaken by recent turmoil, the big picture remains attractive. Before 2008, the industry experienced stable growth rate at 4% per year at average. However, recently the industry faced 2 crises in 2015 and 2019. The 2019 crisis can be attributed to the rise of political and macroeconomic tensions across the globe. These tensions were amplified by inefficiencies in the value chain. Long-term prospects of the industry look more favorable than its short-term performance. However, market players shall be ready for changes. We identified 2 key long-term trends that will influence diamond demand in general, that are macroeconomic dynamics and consumer preferences. Diamond jewelry sales remain correlated with GDP and PDI of United States, China and India. Although we expect deceleration of growth on the American market, this trend can be partially offset by rising PDI in China and India combined with projected rise of middle class in these 2 countries. These countries are already driving personal luxury market and their influence will increase even more in the coming decade.
Consumer preferences on key markets have been favorable for decades, but new generations bring unique challenges for the industry. As millennials and Z generation become main diamond consumers, we expect higher use of diamonds in a wide range of luxury goods, because they favor usability over variability. They also seek self-expression and are less inclined to follow established traditions, including diamond wedding rings, for example. Origin of the diamond seems to be extremely important for millennials and Z generation as well. Socially and environmentally responsible companies such as Alrosa will be able to benefit from that. Among factors supporting diamond demand in mid and long term are rising self-purchasing among young women in the US, developing wedding tradition in China, and remaining spiritual meaning of diamonds in India. However, demand growth will depend on successful marketing efforts of key players. They shall focus on capturing younger generations and segmenting natural diamond and LGD markets. Responding to this challenge, Alrosa, in cooperation with De Beers and other leading diamond companies, promoted Diamond Producers Association. This association aims to facilitate joint marketing efforts on the key markets to sustain demand and supplement individual campaigns.
In 2019, global diamond production is estimated to have declined by 5%, responding to severe demand reduction and depletion of major deposits. There has been oversupply on the market since the dramatic increase in 2017. However, companies are reluctant to cut production as it will affect its marginal costs, and they prefer to increase inventories instead. During 2019, as a response to the industry crisis, major producers cut supply by 25%, which further increased their inventories. The destocking cycle is likely to start in the late 2020, provided that our demand expectations fulfill. Taking into account lack of new major mining projects coming into operations in the coming 3 years, and planning closing of several renowned mines, we expect annual diamond production to stabilize by 2022, fluctuating around 140 million carats. Long-term diamond production will depend on demand outlook, as it will determine companies' willingness to invest in exploration and development of new deposits. However, the capacity for production increase is limited, as exploration of new deposits has less than 1% success chance and no major discoveries have been made since the 1990s. There is a shortage of new projects. Most of current deposits have been discovered decades ago and are past their peak levels of production. Moreover, with the advent of laboratory-grown diamonds that are able to satisfy demand for industrial diamonds, producers will focus on gem quality rather than quantity. As a result, diamond production will either flatten out in case of sustained demand growth or decline. Both scenarios envisage possible deficit that is able to drive the prices up in the long term. Alrosa possesses the largest reserves in the world and will be able to capitalize on that deficit.
Alrosa is operating in a favorable market segment, wrought diamond production with the highest average profitability across the whole value chain. Wrought diamond market is highly concentrated with three top companies, Alrosa, De Beers Group and Rio Tinto, accounting for 60% of output. Threat of new entrants is very low because it requires both rich resource base and rich funds. Small companies that may enter the market do not pose threat to key industry players.
In terms of Alrosa's financial standing, our team has come to a row of conclusions concerning the revenue, return on equity and cash flow sheets. First of all, until present, revenue fluctuations were due to volatile currency, which will continue to influence the key figures of the company in the near future. According to our estimates, the future revenue decline will be attributed to global trends described in the market revenue section and macroeconomic factors, including the above-mentioned volatile currency. We expect a sharp revenue rise in 2021, driven mostly by market recovery. In spite of the long-term revenue decline and cost of sellers increasing, profitability margins will remain on a decent level. Alrosa's free cash flow has been growing at a brisk pace, which became the key factor fueling the dividend payout growth until 2019. After reaching its peak, we expect FCF volumes to start gradually declining. Still, Alrosa will be able to support a decent DPS level and will face no difficulties while servicing its debt. In 2018, cash from investment activities was boosted due to disposal of subsidiaries and approached 2015 levels in 2019. Nevertheless, CFI negative value is expected to reduce up to 2024, reaching 14.9 billion rubles, which will be the core factor for lower capital expenditures.
To perform the valuation, we use discounted cash flow analysis, dividend discount model and the trading comparables method, which gave us the target price of 140 rubles. As we can see from the slide, the most optimistic equity valuation was reached by the discounted cash flow analysis, while the most modest one was reached by the trading multiples price to net asset value as well as price to book value. The most moderate valuation was reached by the dividend discount model from 75 to 120 rubles per share. As we can see from the slide, the dividend discount model gave us the 91 ruble per share as a target price with a range of 75 to 120, whereas the discounted cash flow analysis gave us more optimistic numbers with 168 rubles per share for Golden Growth and 146 with exit multiple EV/EBITDA.
According to our team analysis, the most serious risks for Alrosa are risks of global economic slowdown, exchange rate and trade war. As diamonds are luxury goods, their sales are positively correlated with real disposable income of population. In this way, concerns about global recession fueled by geopolitical instability can affect Alrosa's performance with the GDP of the main target markets of the United States, China and India decelerating in 2019. This instability influences volume of Alrosa sales as well as its financial results, nominated in ruble, because the company is highly dependent on the exchange rate. Meanwhile, Alrosa may face challenges related to demand and supply alterations. Considering the younger generation's tendency of neglecting all previous traditions, together with their seek to self-expression, diamond producers are to rethink their marketing campaign and to adapt their product range to the needs of millennials. Besides, after capturing industrial diamonds market, laboratory-grown diamonds moved to a jewelry one. De Beers has launched LGD brand Lightbox, offering attractive pricing for customers with laboratory-grown diamonds value being fixed at 20% for 1 carat stone. To eliminate these risks, Alrosa, being a member of Diamond Producers Association, contributes to diamond sales promotion among these people to keep this target market. Moreover, currently the common trend in diamond mining is the deterioration of the raw stuff, together with shrinking number of productive mines left. Most companies, including Alrosa, maintain the volume of production by processing lower grade ore, and this results in increasing prices which affects the demand. To eliminate this risk, Alrosa tries to maintain higher explorational costs in the industry, at the same time keeping their cost of fighting very low in comparison to the peers. The fact that the majority interest in Alrosa belongs to the Russian Federation raises concerns among other investors, because then some decisions concerning Alrosa's strategic development may be taken for political rather than economic reasons. But at the same time, Alrosa has a strong compliance system of corporate secretary which prevents such risks.